Welcome to Mock Advantage, Professional Perspective in Accounting. My name is Scott Showalter. I'm the director of the Jenkins Master's Accounting Program at NC State. Today, we're very fortunate to have David Walker join us. David is the past Comptroller General of the United States. I think it's very safe to say David's career and the influence may go way beyond his time at the GAO. And so at this time, I will just jump into our first question with David. So welcome, David.
Good to be with you, Scott.
Great. Appreciate you joining us today. You've served in a variety of roles in your career. And so this is sort of the way to let you introduce yourself. If you can just talk briefly about your career experiences.
Sure. Well, I'm a CPA by training. I started out in audit with PricewaterhouseCoopers and Lybrand. Then I transferred into practice management, running the firm as a business for Coopers. And as you know, they've merged over the years. I then went into human resource consulting, executive search for several years. I then went into the federal government, number two, then number one at the Pension Benefit Guaranty Corporation, number two, then number one at the Employee Benefit Security Administration at the Labor Department. I then became a direct admission partner with Arthur Andersen. I ran a global service line for them dealing with human capital strategy. While I was a partner with Andersen, I was also one of two public trustees for Social Security and Medicare. After Andersen, I became the Comptroller General of the United States, which we can go into a little bit more detail about what that is, head of the Government Accountability Office. After that, I was the first CEO of the Peter G. Peterson Foundation. During that time, I was also chairman of the United Nations Audit Committee. After that, I founded and led the Comeback America Initiative. And then after that, I was a professor at the Naval Academy, taught the economics of national security. I've been on the Defense Business Board. I'm still on it, been on and off it for 20 plus years. And I keep pretty busy, Scott. Keep pretty busy.
Yeah, I knew that was a loaded question when I gave it to you, but I think it's very obvious why we invited you on here today to be able to share the variety of experiences. And I think those experiences will very much come out as we go through. And you did mention you were the Comptroller General of the United States. Matter of fact, you were the seventh Comptroller General of the United States. And our audience may not really appreciate everything of which that position is. So if you could just share a little about what did Comptroller General do?
Well, the Comptroller General of the United States is basically the chief auditor, the Auditor General, and the chief accountability officer of the United States, and also the chief executive officer of the U.S. Government Accountability Office. By having that position, you're also chairman of the Intergovernmental Audit Forum, which oversees federal, state, and local auditors. I happen to also be on the board of the International Auditor General Organization, head of strategic planning for them as well. So, the most prominent role is you're the chief executive officer of the U.S. Government Accountability Office, which is a legislative branch agency that helps the Congress oversee the executive branch. And our client was the Congress and the American people to try to help improve performance and assure accountability for the benefit of the American people.
Yeah, you were in that position for 10 years. And 10 is supposed to be able to span political parties if that comes about. What were some of your challenges as well as your most rewarding experiences in that role during those?
Well, I mean, the biggest challenge is before I came in, the agency had been downsized 40% involuntarily. It had also imposed a 5-year hiring freeze, which is for a professional services firm, which is basically what it is. You just don't do that. Okay. It mortgages the future big time. And what the employees didn't know was that they were going to be downsized another 25 to 40% if I didn't turn it around. So I took dramatic steps to transform the GAO to do its first ever strategic plan. It had been in business since 1921, never had a strategic plan. By the way, the U.S. government's been in business since 1789. It still doesn't have a strategic plan, but we can come back to that later. After developing the strategic plan, got us to focus on oversight, insight, and foresight, eliminated about a third of the offices, eliminated a layer of management, eliminated about 15% of the staff based upon skills, knowledge, and performance, consolidated 35 units into 13, focused more horizontally and externally, developed a number of partnerships domestically and internationally, leveraged technology, modernized our human capital practices, among other things. And after that, we were 50 to 100% more productive, 3 times the outcome-based results. We generated about $110 for every dollar invested in the agency, 95% positive rating from what I would call the toughest client on the face of the earth, the U.S. Congress, and second best place to work in the federal government. So I think it went pretty well.
Yeah, well, you created a foundation that continues after you left too. I mean, I think GA around the world is revered as one of the top organizations in the world, and that's a credit to what you were able to do. And
Well, the good news is, Scott, is my number two, Gene Dodaro, who was my chief operating officer, became my successor. And while a lot of the changes that we made while I was there wouldn't have been made if I wasn't there, Gene was instrumental in helping to implement those changes. And I recently met with Gene, and Gene told me that 95% of all the changes that have been made have stood the test of time. And that's the real key on transformation. Do things stick long after the person who led the transformation is gone? By the way, I also ended up using our experience at GAO to help transform domestic accountability organizations and international accountability organizations, including developing the first ever strategic plan for the International Organization of Supreme Audit Institutions, which is 192 countries around the world.
Well, great. Well, during your time as a Comptroller General, and since you've had a focus on fiscal sustainability, and you alluded to that earlier in some of your comments, with a lot of misinformation floating around out there today, I think that's fair to say. Please explain the importance of the debt-to-GDP-based Fiscal Responsibility Amendment. I know you're very, very passionate about it. You can talk a little bit about that.
Well, there are several metrics that I think are the most important metrics. Okay, the most important, I think, is debt to GDP. Not all debt is bad. Sometimes you have to take on debt because you've got a recession, you've got a national emergency, you've got a war, whatever. But too much debt is not acceptable. And when I say too much debt, I'm not talking about nominal dollars. I'm talking about debt as a percentage of the economy. And up until recent decades, the U.S. never had debt to GDP of over 40%, except during World War II. And after World War II, we grew the economy faster than the debt, even though the debt didn't come down. And debt to GDP plummeted to about 40% when Reagan came in. We've lost control in the 21st century. Debt to GDP is, depending on which metric you use, public debt is about 100% of GDP. Total debt subject to the debt ceiling about 125. Both are too high and projected to go much higher. So debt to GDP is number one. The other one is what percentage of the budget is mandatory spending on autopilot where we've written a blank check. Now it's about 75%. How can you have a budget when 75% of what you're doing is on blank check? And that doesn't count tax expenditures, which we can come back to. In addition, interest as a percentage of the budget. Interest is now our second largest expense, exceeds defense, exceeds Medicare, doesn't exceed Social Security, but it will the way that we're going unless we change course, and clearly we need to change course.
Great. Well, I'm going to say, setting politics aside, please provide your assessment of the current efforts to bring fiscal responsibility to the federal government. The current administration has put out there that's what they're trying to do. So again, not from a political perspective, but observing what's going on. If you could comment a little bit about that.
My view is actions speak louder than words. We don't have a political party that is fiscally responsible. We haven't had for several decades. The last president who was fiscally responsible was Bill Clinton. The one who was fiscally responsible for him was George H.W. Bush. Things really started spinning out of control in 2003 when three things happened. Second round of tax cuts didn't pay for themselves, didn't come close. Invaded a sovereign nation without declaring war under false pretenses, cost trillions of dollars, thousands of lives. That was Iraq. And expanded Medicare to add prescription drugs, added $8 trillion in new unfunded obligations when it was already underfunded 19. It's gotten worse since then. It's gotten much worse since I left in 2008. If you look at what's going on now, President Trump has got the Doge initiative with Elon Musk. They're not doing an audit. They're doing a tactical transactional review using artificial intelligence to try to identify possible probable fraud, waste, abuse, or mismanagement. They're finding a lot of things that are very, very troubling. At the same point in time, they're really not cutting spending very much because I think they finally found out that only Congress can cut spending. So you can cancel all the contracts you want to cancel. You can cancel all the grants you want to cancel. You still have to spend the money. You just have to spend it on something else. We need to revise that. That's a stupid rule. Okay. Congress provides a ceiling and a floor on appropriations. There's one big exception. That exception is headcount. Congress gives you a ceiling on headcount. So if you impose hiring freezes and do RIFs, voluntary or involuntary, okay, then you can save money. But there can, how you do it matters. You need to do it based on skills, knowledge, and performance based upon a strategic plan. If you don't, you can end up having serious adverse consequences over time. If you look at the House budget resolution, it makes things worse rather than better as compared to current law. The president says he wants to balance the budget in 3 years. It doesn't pass the straight face test.
Yeah.
What people don't realize is that, the 36 trillion plus in debt that we have is just the tip of the iceberg. We've got another 90 trillion in liabilities and unfunded obligations, some of which are on the books and some of which aren't, which we can come back to. And so our hole is much deeper than the politicians want to admit. And they really haven't done anything meaningful to deal with it, which we can come back to what needs to be done, because there are several concrete things that need to be done that aren't being done, that hopefully will be done by the end of this administration.
You have a lot of information you share, and that's one of the responsibilities, I think, of the Comptroller General, is to share that information. And so the last several sessions of Congress, there's actually been a bill introduced to require the Comptroller General to appear before Congress to provide an assessment of the federal government's fiscal sustainability. All that, it is bipartisan support from what I understand, although it hasn't passed yet. Do you think a bill like that would actually help inform Congress about where the federal government stands?
Well, first, I support the bill. It clearly can't hurt. It can only help. But one of the things that I find is when you're telling the people the same thing over and over again, when you've told them many times before and they haven't done anything about it, that's not going to move the needle. And that's why I think, while that, that is fine. I think it's a good thing to do. We need more concrete actions in order to get us where we need to be. Just telling people you have a problem doesn't do anything. One of the reasons I left as Comptroller General a little bit short of 10 years is because one of the things that I wanted to do was not just talk about the problem, but talk about potential solutions. When you're Comptroller General and head of GAO, you can be very aggressive about talking about operational improvements, but you're not allowed to talk about policy solutions. That's deemed to be beyond your scope. Well, you can't just tell people you have a problem without show them a way forward, both as to process as well as potential solutions. So that's why I left to, become head of the Peterson Foundation, eventually the Come Back America initiative. But I'm sad to say things have gotten much worse since I left, and time is getting short. We are, our future is at risk. There's no ifs, ands, or buts about it. We've been abusing our position as the world's leading reserve currency. There are a number of warning signs that are readily visible, and yet we're not doing enough to try to deal with it.
Right. So understand where we are. One of the other areas you focused on, you alluded to it, we're going to come back to it, is you focused on improving financial reporting. You talked about tax expenditures and other things. Yeah. What reforms do you think are needed really to bring this together?
Well, let's talk about financial reporting reforms, and then we can talk about other reforms. Okay, the financial reporting reforms, I would say several things. One, on the asset side, I don't think that we need to be showing weapon systems, which we have no intention ever of selling, on the balance sheet. Rather than that, I think we need to have fuller and fairer disclosures of numbers and condition of systems, rather than trying to attach a number to them. Secondly, on the liability side, we owe several $1 trillion to the Social Security and Medicare trust funds. They're backed by the full faith and credit of the United States government. They're guaranteed as to principal and interest. They're guaranteed by the by the Constitution of the United States, they should be a liability. We should be treating these trust funds as separate and distinct legal entities, not as a sub-account of the general ledger. And therefore, we're understating our liabilities and we're understating our interest expense very materially, both. Thirdly, I think we need much more disclosure on tax expenditures. We issue $1.8 trillion a year in tax expenditures. There's very little disclosure with regard to tax expenditures in the current financial reporting. I believe there's two kinds of spending: direct spending and backdoor spending. And tax expenditures are direct door spending and backdoor. And by the way, when you add direct spending to the backdoor spending, tax expenditures, Congress controls less than 15% of the budget every year. That's totally mindless. And the last thing is, I think we need a double bottom line on the balance sheet. We need a bottom line that deals with assets and liabilities, and then we need to bring up some numbers from the statement of social insurance, and we need to show a second bottom line that talks about net position based upon not just liabilities, but also unfunded social insurance obligations. Those would open some people's eyes, I think. And then I think we also need to translate these numbers into something that people can understand better, per person, per household, numbers that people can relate to, because they can't relate to trillions and trillions of dollars.
There was an article in the Wall Street Journal, matter of fact, this past week, about people not being able to relate to amounts that are that large. So
one of the things you can do, Scott, is, and I've done this many times, is take the U.S. government's financials and drop a bunch of zeros. Okay, you drop a bunch of zeros and they show what it would be for a household if based on the revenues, the expenses, the deficit, the debt, and then the unfunded obligations. Let me tell you what, they get that, and it is real ugly.
Yeah, absolutely. So Dave, I really thank you for capitalizing a lot of that together in a very short period of time. So what do you do in your spare time anyway, when you're not out here promoting the awareness for fiscal sustainability? What do you do in your spare time?
Well, I'm chairman of the Federal Fiscal Sustainability Foundation, which is pushing for fiscal responsibility in general and a constitutional amendment that will limit how much debt as a percentage of the economy this country can take on. We can get into that a little bit more if you want. There's two ways to get a constitutional amendment: the old-fashioned way, 2/3 of the House, 2/3 of the Senate pass something, 3/4 of the states ratify. I've become convinced that Congress is not going to do that. It's addicted to spending, deficits, and debt. It's mortgaging our country's future and our children and future generations' future. That's unacceptable. It needs to stop. And so the second method is to get the states to take the lead, and that if 2/3 of the states file an application with the Congress for a convention to propose a fiscal responsibility amendment, not to open up the whole Constitution, just that issue, then Congress shall call a convention. If a half or more of the states agree on something, it goes back to the states for ratification. Shockingly, I and a few other people have found out that we crossed the requisite number in 1979. We hit a high in 1983, and Congress never did anything. So our group is working with states' attorneys general to get them to sue the Congress, to force them to call a convention if they don't propose their own amendment. This is something that's unprecedented. It will be a shot around the country and around the world. It ultimately have to be decided by the Supreme Court. But I think that's what's needed. Congress is out of touch and out of control. So that's one thing. We're also fighting for a statutory fiscal sustainability commission where you get buy-in from the Congress and the president. Simpson Bowles didn't have that, where you would have express responsibility to do citizen education and engagement on where we are, where we've been, where we're headed, how we compare to others, build a burning platform for the need for reforms, solicit input on potential reforms, and then make a package of recommendations with 2 up or down votes. The first up or down vote would be, how do we assure the solvency and sustainability of Social Security? And secondly, how do we reduce debt to GDP to a reasonable and sustainable level over the next 10 to 15 years and be on a path to keep it there? So those are a couple of the big things I'm involved with. I'm also involved in an effort that would follow on Doge. Doge, as I said, is doing a tactical and transactional approach. Frankly, the accountability community can learn some things from what they're doing. How to be able to do more continuous auditing, how to apply AI in that effort, if you will. But what they're not doing is what's needed, which is a strategic and transformational review of the government. What is it doing? How does it compare to its constitutional responsibilities? What are agencies doing as compared to their statutory authorities? What are we trying to accomplish? How do we measure success in outcome-based terms? How are we doing based on that? How do we compare to others? Which is very similar to what we did at GAO. What we did at GAO is transferable and scalable to the rest of the government, but we haven't had the leadership or commitment to do it. That would result in a much, much, much more dramatic transformation, and it would help to be able to put us on a more prudent fiscal path. But we still need that commission. We still need the constitutional amendment, because the only thing that can bind current and future Congresses to fiscal sanity and sustainability is a constitutional amendment. That's the only thing that can bind them.
I was not aware of the second pathway that you talked about. I was thinking the traditional way, which I didn't have much hope for. Doesn't have much hope for either.
And Scott, and quite frankly, 95+% of Americans aren't aware of it. I would guess that a vast majority of members of Congress aren't aware of it either. Okay, and as far as other things, I mean, I'm on the Defense Department's business board. I'm on several advisory groups. But from a personal standpoint, I play pickleball 5 days a week for at least 2 hours. I try to play golf a couple of days a week. I try to see my grandkids and kids periodically, and we like to do a little bit of travel too when we have time to do it.
Well, David, I want to thank you very much. Very informative. I knew you would be. That's why I asked you to come on. I knew you provide a lot of information I don't think most of our audience knows about, and that's why I knew you had that information. And so I'll give you one final comment. Is there anything you want to leave us with about maybe some hope for all of this?
Well, yeah, I mean, look, we're a great country, arguably the greatest in the history of mankind. We're clearly the leading superpower. By that, I mean, we have global economic power, global diplomatic influence, global military capabilities, and global cultural influence. However, the leading indicator on the way up to become a superpower and the leading indicator on the way down is losing economic power. The fact is, if you can't put your finances in order, you will lose economic power over time. Right now, we face an alliance against U.S. and Western interests around the world from an economic, diplomatic, military, and cultural perspective. It's led by China, Russia, Iran, and North Korea. There are other countries that are involved in it. We're not taking it seriously enough. We're mortgaging the future of our country, our children, our grandchildren, and future generations. That's irresponsible. It's unethical. It's immoral. It must stop. I'm okay. My wife and my wife are okay. I'm not in this fight for us. I'm in this fight for my grandkids and for future generations. And we're in a situation right now where my generation is the first generation in the history of this country that is not leaving things better off and better positioned for the future. That's unacceptable. As you know, Scott, as a leader, your job is not just to generate positive results today. It's also to leave things better off and better positioned for the future. That's what stewardship is all about. And that's a word that we've forgotten. The good news is we can turn this around. But to turn this around, first you have to recognize that you're on an unsustainable path. And then you have to recognize that there are several actions that are necessary. It's not just what you need to do, but how do you get it done? And I've outlined at least 3 steps that are necessary to get it done. And I'm going to do everything I can to try to make sure that they get done. But I'm frustrated, but still fighting.
Yeah, I appreciate it. And on behalf of, I obviously thank you for the work you did when you were with the federal government. Obviously, thank you for the continued effort that you have. You've not given up the fight. And I really do appreciate your effort. And I know you will not. And thank you very much for joining us today.
Good to be with you, Scott. All the best.
Well, thank you very much.